So Trading212 have just announced they'll be rolling out a share lending program today. So the way this works is that people who have accounts on Trading212, like me and you watching this video probably, Trading212 will take your shares and essentially lend them out to third parties. And in return for this, Trading212 get a fee, and they've said that they will split this fee 50-50 and pay it out on a daily basis to users. And I think the main question on everybody's mind when they hear about this program first is, will my shares be safe? Will I be able to still sell my shares whenever I want to? Well, we'll jump into that in this video. And just to note as well that this is currently only available for Trading212 UK accounts. For the likes of myself who has an Irish account and people in other European countries, this is currently not available, but Trading212 does plan to roll this out to other European countries soon. But for us, what we do have available is a feature called Earn Interest on Cash. And this is essentially like a lot of other brokers are offering right now, is any uninvested cash in your stockbroker account with Trading212, they essentially will lend that out, and in return they will give you an interest currently at 1.25%, it says in my account, and that will be paid out or accrued daily, and you can see that in your account as well. So just to let you know that they're two separate things. So one is on uninvested cash, and then this other one that's currently only available in the UK is basically where they lend out your shares to other third parties, and then they get a fee for that, and then they split that fee 50-50 with you. Okay, so now that we've established that, let's jump into the changes to their terms. We'll jump into the legal jargon there and see what they've updated, and that will give us a bit more clarity on how this program works. So this useful document here basically lists out the previous wording and then the new updated wording. We're going to be focusing on the new wording obviously, and I will leave these documents linked down in the description below if anybody wants to check them out for a bit of a deeper dive themselves. But let's skip on to 24.2, which is under the share lending clause, and you can see that it says you can withdraw your consent from our share lending program at any time without any charge. This will not affect your account with us, and you will still continue to be a client of Trading212. So essentially, if anybody does not want to be involved in this program, they can still opt out of this. I believe there's an opt-out button. I'll put an image on screen here where you can simply remove your consent from this program. So if that's something that you do want to do, make sure you do opt out and don't forget about it. But at the same time, for a lot of people, this might be a good way to make some extra money. Jumping down to 24.3, you can see that when your shares are lent, Trading212 receives interest on a daily basis. They share 50% of that interest with you based on your proportion of shares that have been borrowed. Following on from that, it says we will pay this amount into your account on a daily basis and hold it as client money. If the amount is less than 1 penny, we'll round it up essentially. Essentially what happens here is, well, in terms of the value of your shares, it goes on to say in 24.4 that they will give 102% collateral. This is stored as treasury bonds for any shares that they do lend out of yours, to ensure that essentially if the borrower does go insolvent and can't return the shares, they have that collateral set aside for you. So that essentially mitigates the risk, and what happens is they review this on a daily basis to ensure that 102% collateral is kept up. So read a little bit more on 24.4 if any of that's unclear. Really important part here in 24.5 where it says participating in the share lending program will not restrict you from selling your shares at any time. You will not experience any delays in executing trades due to share lending. So that's obviously very important for anybody who is going to be signing up to this program, that they'll be able to sell their shares as normal. Of course, 24.6 then goes on to say we cannot guarantee that your shares will actually be borrowed, so potentially you may not earn much interest off this if your shares are not being borrowed. For example, there could be certain stocks that just have no interest in people short selling them, which is essentially what the borrowing aspect of it is. So if they're not popular stocks you're holding in your portfolio, there's a chance that maybe they won't be borrowed out. So jumping on to the disclosure notice here, we can then see 4.2 regarding dividend taxation. So as you can see, the shares are lent to the borrower or generally recalled from the borrower before the ex-dividend date to capture the dividend. So this is essentially when they lend out these shares, technically you don't own them anymore, so you wouldn't receive a dividend for them. But what they're saying is these shares are often returned by the borrower before the ex-dividend date to make sure that the dividend payment goes to you essentially. They also go on to say that if the borrower has not returned the shares by the ex-dividend date, they will just send the payment on to Trading212, who will then forward it into your account. Another important note here in 4.4, counterparty credit risk. there's a potential counterparty credit risk where we or the borrower become insolvent and do not return your shares. We mitigate the risk by providing you with collateral equal to at least 102% of the value of your shares lent. The collateral will be in the form of US Treasury bonds and will be held in line with the FCA's client asset rule in a segregated account with a reputable third party. So essentially, worst comes to worst, the borrower and Trading212 become insolvent. There will be 102% collateral of the amount of the share value that has been borrowed out for you, and essentially if that does happen, it's in a segregated account separate from the two companies, so then you'll still be able to retrieve that. Jumping into a little snippet in 4.5 then as well, it's just important to note that in the unlikely event of Trading212 and the borrower going bankrupt prior to the collateral being adjusted, your assets are protected up to £85,000 with a financial services compensation scheme. So just keep in mind, if you do have more than £85,000 invested in your Trading212 account and you are a part of this program, just remember that that is the max liability that you'll be able to claim back from them in the event they did go insolvent. So if you do have more than 85,000, could be potentially a good idea to look at maybe spreading your risk across a couple of other brokers there, or just removing yourself from this share lending program. So that essentially covers the share lending program that Trading212 have just rolled out. I'll be keeping tabs on this to see when it rolls out into the Irish market. As mentioned, for now, Irish and other European countries currently have access to the earn interest on cash option, where we're currently earning 1.25%, it looks like, on uninvested cash. So at least we do have that option there, because a lot of other brokers had rolled that out. So good to see Trading212 keeping up with that. But for now, just available this share lending for Trading212 UK accounts. One important aspect here as well, that ISA accounts cannot join due to HMRC regulations, so please keep that in mind. But anyway guys, thanks so much for watching. If you did enjoy this, make sure you do drop a like, and I'll catch you in another video.